Good morning and welcome to another exciting episode of One Path to Wealth. I am your host, Jeremy Dicker, the Hebrew Hammer, with my co-host, Peter Hoopis. Wow, what a day, huh, Pete? How are you?
I'm doing great. Doing great, Hammer. How are you?
Always good, always good. I think the topic of today that you suggested is incredibly apropos given the environment that we are watching before our eyes. But why don't you kick us off here and then we'll get right into it.
Yeah, I think this will be a great topic today. We want to just talk about the chaos and the uncertainty and things that are going on in the world right now and how it relates to planning and financial planning, investment plans with our clients. And, one thing that I think has been, not unique, but that I've noticed over this period of time is that we've had some really good conversations with people that are not clients that have now become clients because of a lot of what's going on. If you look at it as it just relates to planning, and typically what you see, right, I think has a lot to do with the plan is built on consistency or just like a static number, right? So with that as a little bit of a basis to what's going on in today's world, I mean, the uncertainty and the chaos, are plans built for that right now?
Yeah. So first, at a high level, I'll talk a little bit about that. So I think number one, you never want to run into the fire or believe the chaos or operate in a world where things that were true just a short 60, 90, or even 100 days ago now no longer hold true. Now, obviously, there are things that are exceptions to that rule. But as a general rule, chaos is not something we believe that there should be a lot of time spent on. So, as a general rule, when you're thinking about planning, whether it be investment management, whether it be retirement planning, estate planning, the operative word there is planning. And if you've done the proper work, the proper planning, and to your point, we've had lots of conversations very recently with individuals that are not clients of the firms, but just were seeking some guidance, seeking some advice, wanted to bend on an ear or have a chat. And those individuals that we've spoken to, we've given that guidance that basically says the same thing. Number one, absent a real financial plan, absent a plan, you've just got really cool stuff. You've got your investments, you've got your aggressive investments, you've got your conservative things, you've got your cars or your wine or baseball cards or jewelry or whatever it might be. But absent a plan, you just have really cool stuff. Now, at the end of the day, the best financial plan in the world will not hold water. It will not support your goals and objectives unless you have the proper investments and the proper vehicles in place to deliver on what the plan says are important to you. But again, absent having a plan, the stuff doesn't work, and absent having the stuff, the plan doesn't work. So they're not mutually exclusive. And I think it's very important to keep that in mind. So what we tend to focus on as we think about having a plan that's built for chaos or built for the long run, because I don't really want to use the word chaos. I think right now that's becoming an overused word, but I think what's very important is to pay close attention to keeping focused in the eye on the prize of, do you have a plan? Does anybody really believe that Apple, or pick a company that you have real belief in, that you've got real conviction in, and that goes companies like Amazon. And again, I'm not saying to go out and buy Amazon or Microsoft or Apple, but if you have real conviction in these companies and you believe in what they're doing, do you really think that what they were doing in January or February has changed in March or April? Do we really think that's changed? Right? You're still going to have your iPhone. You're still going to log into your Microsoft Outlook or do cloud computing. The world will continue to spin. And where people see themselves separating from their dollars or from their money, I shouldn't just say dollars, is when they abandon or abort the plan that they've put so much time, thought, effort, and money into, and start reading the headlines and believe, in my opinion, a lot of the salacious words that are out there that aren't necessarily true and most certainly don't always apply to the individual reading them. And what we have to keep in mind is that the news and the media and articles in newspapers or books or whatever it might be, keep in mind what the primary focus is there. The primary focus is to sell more media, to sell more books, to sell more news. That's the primary goal. So if they don't have something to talk about, there's nothing that's going to get sold. And when we think about a plan, to your point, when we think about a plan, that plan's got to be consistent with that.
Well, don't most people, I mean, a lot of the people that you're talking to, don't they think they have a plan though?
I think most people think putting money into a 401k or an IRA or a pension plan equals plan.
Right.
And that is part of the plan. That's one of the many buckets that go into a proper financial plan, but that's not a plan. Just like borrowing money on your home or having a mortgage, that's not a plan. Those are products, those are deliverables as part of your overall plan, but they're not a plan. And fundamentally, let's be honest, there is no such thing as a perfect plan. I mean, things change, and the perfect plan is one that's fabulously imperfect. The perfect plan is something that moves and adjusts and adapts to the individual circumstances.
Yeah.
The perfect plan is something that's customized and built with the understanding that things will change. That's the perfect plan. And unfortunately, you and I have been around long enough to know that most people think about financial planning or retirement planning as a flat line and as a black box, when in reality, those things are simply not true. It's dynamic. Things move up, they move down. It's dynamic.
So that's what we're seeing now, right? When you're talking to people, say, all right, I've got a plan. The plan's been great. I mean, you really didn't have to do much if you had anything going on. But now you get some things happen. You got this volatility. I mean, what happens in that period of time when those assumptions change?
Yeah, I think there's a few things I would say there. Number one, it's keeping yourself focused on the prize. It's keeping the eye on the prize. It's realizing that if you've invested money in a mechanism or a method that is not consistent with your goals, objectives, and dreams, then the plan is not going to deliver on what those goals and expectations are. Said differently, if you're someone that's 65 or 60 and you're thinking about retiring in a time period that's short, your investments, your dollars, your plan itself has to adjust and be very different than someone that is 25, just started their career as a physician or an attorney or whatever it might be. That being said, think about athletes and entertainers that maybe have, and we'll focus more on athletes as an example. But let's say you have an athlete that's 28 or 30 years old. Do you treat that person with a multi-million-dollar income as a 28 or a 30-year-old, or do you treat them as a 60-year-old? My view would be, do you treat them as a 60-year-old? Because at the end of the day, their career span is far shorter, in theory, than that of an attorney or a physician or pick another profession. Now, the dollars are bigger, right? The dollars are bigger. But there's a perfect example of something that I've seen over the last 3 decades now, where you've seen advisors guide their 25 or 28 or 30-year-old athlete or entertainer with an investment strategy that's for the average everyday 28 or 30-year-old. When in fact, if that person's career is short-lived and ends at a certain time, and if they don't have the resources that they're going to need to go the duration, to go the run, then you've done them a disservice. So there's an example that I would say that when you think about financial planning and retirement planning, one size does not fit all. And it's very important when people talk about, and we've had these conversations, you and I, Pete, where it's very important when people say, well, my financial advisor did this, or I heard my friend got rates of return of this. Well, the real question is, number one, what's the risk-adjusted return that they got? Meaning, did they have to take outsized risk to get you that return? Number two, is that person you? They're not you. There's only one you. So fundamentally, when you think about that stuff and you understand it, the real key is making sure that you've devised a plan, a program, and a set of expectations that meets your behavior and the things that are consistent with you, that can address liquidity, tax law changes. If you own a business, is there business disruption built into that program? market volatility? And are you set up to consider what kinds of things you need to do should the market be more volatile than you initially set your plan out to expect, some of which we're seeing right now? And at the end of the day, part of the job of a good financial professional or advisor of any type is to read the news, stay focused, be there for the clients, be an ear, and make sure that everything that the client is saying is important to you is being addressed, that the expectations are being met, and that there's a clear path to success going forward.
Yeah, those are some good ones. I mean, we've talked the market volatility that comes up, probably the most common, right? But you mentioned a few others. I mean, business disruption, tax law changes, liquidity situations. So talk about those a little bit, because sure, I've got a plan. The market's going crazy, but the market could still be going just totally fine. And there's other things that happen. So those are very situational. Those are individual to your clients. What are you doing in those situations? You might get that phone call, the business close or whatever. I mean, let's talk about that a little bit. Some of the other things outside of just the overall market volatility that might come into play with some of your clients' plans.
Yeah, sure. I think there's a few things there. I think, number one, this idea of de-risking one's portfolio. What exactly does that mean? Does Meta, do the tariffs and the new tariffs have any bearing on what happens with Meta, as an example, right? And again, I'm not saying go out and buy a bunch of Meta, but I am saying when you see the stock price pull back based on this news of tariffs, you have to really ask yourself, what in the world does that have to do with anything, right? But what it comes down to is news. When you think about business disruption, when you think about liquidity, look, everybody's got a different appetite for risk, and everybody's definition of risk is different. So as such, a person's portfolio, retirement plan, personal financial plan need to respond to that person's own set of needs. Meaning, if someone is more quote unquote conservative, should they have more cash and less equity exposure? Maybe. Depends on what their objectives are. If someone has a higher appetite for risk or market volatility, perhaps they have a larger line of credit where they think of debt as I do, which is, again, debt in the most appropriate sense of the word, but debt as if debt managed is actually an asset. Debt unmanaged, that's a liability, but debt managed can be a very valuable asset. So the question is that individual business owner, successful executive, superstar athlete or entertainer thinking about their portfolio in a way that allows them to respond appropriately, that allows them to weather the storm when that storm is there? Look, I think it's very easy for everybody to play Monday morning, quarterback. I should have sold my stock at X, Y, or Z price. It was a recession coming. Were we in a recession? I've heard it all. And you hear economic pundits up on the podium saying this, that, and the other thing. When in fact, anybody that says that they've seen this before, it's false. No one has seen this before because we've never seen anything before. History does tend to repeat itself, but history, when it repeats itself, is not the same because we have different forms of technology, different forms of communication methods. Everything is different and unique. So when you think about your financial plan and what you're looking to do and your retirement plan, at the end of the day, what's very important is to stay focused on the things that are core and fundamental to you. Are you setting aside the right amount of money? Are you de-risking or de-leveraging at the right times? Should you buy that new automobile or whatever it might be on leverage, or is it better if you have the cash to buy it using cash? There is not a right or wrong answer because everybody's got a different appetite for that. But I think what's very important to come back to the theme of this a bit, you have to manage the chaos in a way that's consistent and important for you. Because chaos is only as much as you allow it to be. If you swim into it, if you rut into it, then you're likely going to get pounded by that wave, right? But if you take a minute, step back, really focus on things like we've been discussing today, the results will be okay. The results will be okay.
Yeah. How about, we've got a long background on the insurance side. And I think when you address it, when chaos comes up again, A lot of times insurance can help with that. I mean, where are you seeing for a full financial plan, where we using insurance in those plans that could help in those situations of chaos?
Yeah, for sure. So a couple interesting things. As you know, a year ago, a very dear friend of mine passed away at 45 years of age, client, wonderful guy, a couple of kids. And he wasn't properly protected from an insurance perspective. So his family is not going to be well off forever. And that's something that I have to live with as an advisor. Did I do the right thing? Certainly, we spoke about it numerous times, but at the end of the day, could we have done more? And there's always that question, right? Even if he had insurance, the question will always be asked, could we have done more? Then ironically, I've had a client in the most recent days give me a call, said, hey, with all the market volatility, how we looking? We're getting close to retirement. Oh, by the way, my husband was just diagnosed with cancer. And are we set up where if there is anything that happens to either one of us? And, we've spoken about the need for a living trust, the need for a will. Fortunately, they have all the appropriate insurances that they need, life insurance and long-term care, disability insurance should he be out of work for an extended period of time. And then should there be something that's really catastrophic and he needs to have extended care in the home, long-term care that'll help that so that he doesn't spend down on the family's, resources or become a burden to his kids. So I think, insurance is this dirty word. People don't like talking about it. They don't like it. Is it expensive? Can I do more with my money? Can I buy term insurance and invest the difference? Well, look, at the end of the day, insurance is whatever you choose to make it. And we're big believers of it. I think there's never been one time in my career where someone's given the check back. Usually the families are pretty happy that they certainly are missing their loved ones. But at the end of the day, the goals and objectives of life insurance or really any form of insurance is to remove the emotions from something that's very emotional, right? The goal of insurance is if someone passes away prematurely, it's to provide enough capital to ensure that that family can move forward and focus on healing from an emotional perspective. And the goal of any good financial professional when you're talking about life insurance as a overall piece of a portfolio or financial plan is to understand that the goal is to remove the emotions from it. Take it away. Let's build a portfolio that's successful of securities, bonds, equities, all those things, real estate, structured notes, the full gamut of financial instruments, products, and plans. And then you also have to look at de-risking the portfolio and more importantly, de-risking your life, where if something does happen and you don't make it home one day, there's life insurance to provide for that family. There's disability income so that you're not depleting assets in your prime earning years and you're not going to have to extend your working career beyond that. And then certainly now with people living longer and longer, making sure you've got long-term care so that the retirement assets that you've set aside can be used for you to truly enjoy your retirement. And you don't have to worry about the back end of your retirement because you've protected it. You've insured that liability. You've de-risked the need for care at the end of your retirement or life. You've taken it away from your kids. You've de-risked it.
I mean, that's really the ultimate chaos. And, as we're talking about it, a premature death or disability, that's really flipping your world upside down, or those that you love, right? And it's such an important piece. And you said it often gets overlooked because people don't want to talk about it. I mean, who wants to talk about that stuff? And over the years, as you said, I mean, we've been fortunate, where we've been able to deliver those checks that help the family out or provide disability income insurance in a time of need. And you're right. No one's ever said, hey, no, I don't need this. Or no one's really ever said, I know this is going to happen to me, so that's why I want to get it, right? No one ever thinks it's going to happen. And it's just really important to protect. If you want to have a sound financial plan, that you incorporate that into it and make sure you address the uncomfortable part, which we see, the uncomfortable part of the plan.
Well, I agree. And you look, I heard this many, 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 many years ago. Maybe it was Nick Murray that said it, maybe not. I can't remember who this quote's from, but financial plan without life insurance is just an investment plan.
Yeah.
And there is no more true of a statement. I mean, at the end of the day, I would have car insurance if it wasn't the law. I would have homeowners insurance if it wasn't the law. all those people, those sad people that lost their homes in the Palisades and Altadena fires that had homeowners insurance, but it's a fraction of what the homes were in some situations insured for. How do you think they all feel now about the need to have insurance? Yes, is it a pain? Is it a bill you don't want to pay? Of course, substantial. But at the end of the day, if fundamentally something bad happens, something outside of your control happens, because as what we're talking about here, Pete, is control. We're talking about here fundamentally is creating a financial plan so you've got control. But guess what? You don't control. You can't always control your health. You can't always control when you leave this world or you get hit by a car. Or you don't always get to control that stuff.
Yeah.
So if you want to control the uncontrollable, why not put in place protections that allow for it? And I think that's a core fundamental to any financial plan. Too often I've heard stories of people that chose not to buy that insurance or put it in because of X, Y, and Z reason. And then there's a disability or God forbid there's a death that occurs. And it just, to your point of earlier, it just upends the family, and the mom or the surviving spouse has to work potentially forever or be relying on their children. Certainly we don't want to put our kids in that position.
How about what if we flip the script a little? Things are going awesome.
Mm-hmm.
We've been talking chaos. I was just thinking, there is that period of time where things are just awesome. Market's rolling. You're crushing it in your job. Your business is doing better than ever. It's one of those situations where it seems like nothing can go wrong. I mean, how are you handling those situations? If you're having a similar conversation with a client, and you're getting that feeling where they're just like, man, things are amazing. Like literally, I can't do anything wrong. The market's up. My business is growing. We got new clients. I mean, what do you do in that situation? Because that can be a little crazy too.
It can. And here's what I'd say broadly, and I think this applies to everybody, including myself. When things are going really great, they can always do better. You can always be better. You can always do more. And when things are seemingly not going as well, it doesn't mean the world is ending. It just means it's just not going as well. And what I would say, broadly speaking, you and I have spoken about this, and you've heard me say this for years, 80% of the time things go great. 20% of the time they don't. And if that 20% of the crud you get on Monday morning at 7 a.m., you can operate in a couple of different ways. Number one, you can say, God, the world is ending. I'm going to go back to bed, pull the covers over my head, and pretend that I'm not here. That's option one. Option two is you can say, you know what? I just got the 20% of the crud now, so it's out of the way. Everything else is going to be great because I've got nothing but the 80% of the good stuff going forward. Now, we know that analogy isn't always accurate. We know that things come up along the way. But what I've said to myself, what you and I have spoken about for years, what I've tried to communicate to my children, family members, friends, and clients, is that things are never as good as you think, and they're never as bad as you think. And when the world is up in chaos, it's never that bad. And when things are going incredibly well and you can do no wrong, you buy the lottery ticket 5 times in a row and it wins every time, it isn't that good either. And I think we all want to live in that 80%. And I think if you live in the 80%, things become a lot easier to tolerate when things are not going the way you'd want them to go. Because what we do know is this too shall pass. Good and bad, this too shall pass. And if you operate in that world, still trying to do the best you can, having meaningful conversations, dialogues, and experiences, but operating with that in mind, I think the rest of it will work itself out. And as we see all the chaos and the volatility and the perceived uncertainty today, and I want to use that word, perceived, I think it's important that all of us try to reach aside and grab our friends by the shoulder and grab our boots and pull them up and realize that, again, this too shall pass. Things are going to be okay. And just stay focused on the things that are good, positive, strong, and resilient.
Yeah, I think that's a great message there, right? I mean, this isn't about trying to freak everyone out. It's really about just empowering people with their plan and with our guidance, help, and support, right? And that we can help them during some of these challenging or uncertain times. So I think a great time to have this discussion. We've been getting some calls. We've been talking to a lot of people, and it's a common theme, and that's why I wanted to talk about it today.
I think it's great. I do think it's the right time, and as we've said in other podcasts in the past, things are going to be okay. Stay focused on what's important. Don't lean into the negative. Lean into the positive. When things seem like they're incredibly chaotic, that oftentimes means that there's changes that are coming. Lean into that. Stay focused and be prepared. And rest assured, things will be okay. With that being said, this is another great episode of One Path to Wealth. I am your host, Jeremy Dicker, the Hebrew Hammer, with co-host Peter Hoopis. If you like this episode, please click like and remember to subscribe. Thanks very much. Have a great day.
Thank you for listening to One Path to Wealth podcast. Click the follow button to be notified when new episodes become available. Visit our website at www.onewealthmgmt.com or give us a call at 855-663-9584. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of One Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Investment advisory services offered through One Wealth Capital Management, LLC, an SEC-registered investment advisor. Insurance solutions offered through One Wealth Management, Financial and Insurance Services, Inc.